We are now into the question and answer session. Going by the numbers, let us give the opportunity first for questions to International Islamic University, Islamabad. May we have your questions, please?
Assalamu alaikum. We are from Islamabad. Last question.
Assalamu alaikum. Assalamu alaikum. Bismillahirrahmanirrahim. My question is that when there will be reciprocal murahaba, then what will be the rate? It will be higher or less, the bank who is returning the amount.
Okay, I answer as the questions come, or
some more questions from Islamabad?
Yes.
We would like to, and we wish there have been some practical examples given to help us appreciate the concepts involved here. Because murabaha then
and like the last thing we have currency swap.
Where do all these things go and stand vis-a-vis ahkam of sarf and so many other ahkam of the Sharia? Day by day, all these things are increasing confusions among our students as well as our scholars. Maybe some basis for these conclusions are also provided. Thank you.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. One of my question is the case of reciprocal murabaha, and
and the other is liquidity problem. And you have mentioned that in Islamic banks can have a relationship
with the non-Islamic banks. So in terms of this, can there any relationship between Islamic bank and the non-conventional bank in terms of liquidity problem or liquidity shortage? Thank you.
Okay, thank you. These are the questions.
Thank you, Islamabad. We have your questions.
okay. Right. Very briefly, the first question is the linkage between the rate, profit rate, between the original murabaha which was done with a party and a reciprocal rate. There is no linkage, and because of course the market conditions change, and you should not say that, you should not see it reciprocal murabaha. You will only, if you have given money to party A, that's the only party you will go and deal to have the liquidity from. You may have no money with party A, but you can approach. The reciprocity is the word I have used in a general way, that if you have been dealing, most institution, it's not likely that I have a line with party A, which means I can give money to party A, but I cannot take the money from it. So the markets work on a continuous basis, and reciprocity is in that sense. It doesn't, I may have no relation, I may not take the money from the party I have given money. At a given, if I have lines with 20 parties, I may have money with only 10. But if somebody offers me a better deal outside these 10 where I have the funds, I can go to them. So in theory, there cannot be any linkage anyway. But apart from that, that is an individual deal under the commodity process, buying and selling of commodity. At the later stage, even next day or 3 months, whatever, there will be another deal. So there is no linkage. And I think to some extent it answers, well, I link with the third question, which is about the Sharia and non-Sharia institutions. The way it works is, as long as the structure and the agreement under which we are dealing is Sharia acceptable, whether it's a Sharia institution and non-Sharia acceptable institution, you are free to do the deal, both placement and taking placements. But the mode in which you are doing should be Sharia acceptable. The second question was practical examples, and whether, and of course I have covered a wide range of things because I wanted to give the flavor of a wide range of activities which take place under the Islamic Treasury. So somewhere, of course, swap arrangements, I just touched base. What is the purpose of the swap? I did not show what the mechanism is. And of course, the commodity murabaha, I gave the example, you will buy at a certain price which is available, then you sell it in the marketplace. So, but practical examples can be done, but then of course the time available may not permit. But we have taken the note, and in future presentation maybe we can have more than one session through which this thing can be covered. Thank you.
Next, Dr. Habib, can we have questions from your students, please? Durham University.
Yes, we have a question here from a student, Rifki. Go ahead.
Thank you so much, Brother Tariq. My first question is regarding commodity murabaha. In our previous lecture, when we were taught by Dr. Umar Chapra, he told us that the commodity murabaha or tawaruf is not permitted in Islamic. I mean, it's not Sharia based. What do you think about this? Secondly, as you mentioned in slide number 6 regarding asset and liability management, and you write there that there are some techniques to match between asset and liability side. Could you share with us some techniques that you are recommended? Thank you so much.
I have a couple of questions. First is, I was just wondering, when you're doing this 1 or 2 or 3 day deals using commodity murabaha, and you have to pay the brokers the fee to buy and sell the commodities, and given that for 1, 2, 3 days the rate of return is extremely small, I mean, how much return do you get? I mean, the cost of doing commodity murabaha is probably high, and how does it work economically? I'm sure you make some money, but there is a cost involved. And second question is about the crisis and the implications for Islamic banking. This has, of course, 2 aspects to it. One is the placement of funds. I'm just wondering how right now with this crisis, where you're placing the funds. And the second is whether, like the conventional finance, Islamic banking is thinking of the instruments it's using for treasury operations, especially using of swaps and those other instruments, new risky instruments. And the third is actually a request. You mentioned that IDB has developed, and I'm aware of that, the profit rate swap and currency swaps, and you have shared this with the regulatory authorities. We have some students here who are working on derivatives and other instruments. If it's possible to share this information with us, basically the academic community, especially to help the students who are working on these topics. Thank you.
Sir?
And we have another question here. Go ahead.
You told that as long as the techniques used by conventional banks are Sharia compliant, we can deal with them. And on the other hand, you told that regarding currency swaps, we can use them as well in order to hedge our various risks. But as we know that in currency swaps, there is the element of interest rate. So how will it work in Islamic ambit?
And finally, we have another question from a student here.
Yes. Yeah. I have one concern, but I'm not sure whether it's relevant. Or not. In the aftermath of the subprime crisis, we have seen that asset-backed securities, or ABS, is not seen as safe as we have anticipated before. And in the context of the commodity murabaha being used mainly for liquidity purpose, how sustainable this will be, because we have been using these commodities for many of the dealings, and as the Islamic banking Islamic banks grow in size, there are more commodity murabaha dealings will be done. And also you have mentioned that this commodity murabaha dealing can also be packaged and sell as securities. So there's a concern that there are a huge number of securities being piling up on top of these commodities. So how sustainable this will be for the Islamic banking system? Thank you.
That's it. Thank you very much.
Okay. Thank you very much for your questions. Let me start with the commodity murabaha and the issue of tawarruq, others. Naturally, I wasn't present what our distinguished gentleman Umar Chapra said, but I think it's the issue of the intent. If the intent is to raise money through some mechanism which is called tawarruq, that is not Sharia acceptable, although there is a debate under some Sharia scholars' views, some mazhabs so called, it is acceptable. So basically, if you want to buy a car and you use some paper transaction, you have no intention of buying a car, but you go to a financial institution, Islamic financial institutions, and ask that I want to buy a car, and then you sell immediately that car to raise money by pre-agreed deals, then I think the intent is not buying a car, but is to raise money. And that is the typical example of tawarruq, and that is condemned by many people for deceiving, and where the motive is something else. So it's a wider subject. I don't want to get entangled in Sharia issues and others. I explained how the commodity murabaha works for placement of money among financial institutions. As I also mentioned that it is one of the main ways in which Islamic institutions are currently dealing. I also mentioned that we at IDB, in fact, there is a technical committee being formed now under the chairmanship of Dr. Zaiti Akhtar, the central bank governor of Malaysia, to find a solution to have other ways of dealing and managing liquidity other than commodity murabaha. Work is going on. There are some technical issues, very serious technical issues, definition issues, which have been holding us back. But naturally, currently I told you what the current situation is, what is practiced and what is there. In future, we hope that some other instruments can work. There was hope that maybe sukuks will come up in different sizes and different shapes, different maturities of good quality. So we are working on it. Hopefully some other alternatives will come about which will be more satisfactory, but that's one of the issues. It is there. I don't think we should worry about the asset-backed securities, what happened in subprime. They are not of the same order of things. They are totally different in its nature. It's basically you're taking a counterparty risk. You are not taking the risk of the underlying commodity. Because as I explained, the way you are buying a commodity and you have it holding and then you sell, and that commodity is sold. Once that commodity is sold on your instruction as owner, and you have created a murabaha, that means the party now owes you the money, and he will pay you back in 3 months' time. That's the murabaha, or a debt created. So that's not dealing with the underlying anymore, but that commodity has been bought, that commodity has been sold, and as a consequence of the transaction, party A has sold this, and and party B who has done will pay you the money. So it is the health of the institution who owes you the money. That is the issue here. So the risk you are taking is the counterparty. Naturally, if that counterparty doesn't exist in 3 months' time or a month's time and is unable to pay, that's the mention I mentioned about the credit risk. That when the banks and financial institutions deal with each other, they do assess the risk of the counterparty and appropriate limits are set. If you are not happy that the bank A is strong enough to deal with you, you will not have limits with them. So the issue is not asset backed in terms of the underlying instrument risk. It is the risk of the counterparty being able to pay you back the funds when they are due. I think in the question of the other issues which you have are matters of detail. The asset liability techniques used, I don't think I will be able to explain and do a proper justice to explain in this session. Maybe we can have a separate dialogue between your institution and IDB through IRTI, and they can set up some kind of discussion session, training, some written material which we can provide as such. Similarly, the issue about the swap arrangements we can share certainly. Again, if you contact IRTI, we can make available some documentation which has been prepared for the benefit of the wider public who has interest in this. Of course, there are more than now. Some other swap agreements are now coming up which have slightly different technique, but ours is Sharia acceptable by our IDB Sharia board, and that's what we practice. And many institutions, conventional and otherwise, have accepted this agreement as a legally binding agreement, and that's what we are practicing. So we can make it available. I think that the crisis issue and where the funds are placed in the current market climate, I think I hinted that the liquidity, you want to make sure that the money you give to the counterparties who will be able to pay you back in a timely fashion, and hence those institutions whose major business is investment banking, they may be more involved in funds, they may be more involved in real estate, equities and many other types of things. They may be less liquid. In the case of commercial and retail bank, because they are dealing with the public, money is coming and money is being paid back, they tend to have more liquidity. Also, it is commonly understood that the central banks and regulators may be more supportive of the commercial banks because they are dealing with very large public interests involved, that they will be more supportive of them, and the present example we had seen globally, that was the case. So it is seen to be prudent at the current market conditions to deal with more commercial banks, retail banks, rather than investment banks. And most of the institutions, both conventional as well, have taken this course of action. IDB and Islamic institutions are doing the same. So I think I have answered. There's one question as well, that the short-term deals under commodity murabaha as a rate impact will be much bigger. That's absolutely correct. That the cost, in fact, the rates for short-term placements in market are lower, and the cost of doing the transaction costs also run into that. Most larger investors have dealings with the commodity brokers, and they have agreed lower commission rates for shorter term deals. At least this is what we have done as well. But nevertheless, the argument is correct that transaction cost will bite more into a shorter term deal than they will do for a longer term deal. Thank you.